Hello, this is Ahura again with another daily market outlook video. We are going to check what happened yesterday, what is going on in the market at the moment, and what we have to wait for market on October 6th, Wednesday. As we know yesterday, as I told you yesterday morning, it was the PMI day, Purchasing Manager Index day, and published data from most developed economies all around the globe, totally telling us that the economy is raising. Why? Because yesterday we had service PMI data from most European countries, especially from Germany, Spain, Italy, and UK, and from United States as well. All of them, despite some weakness in Italy and Spain, which still was above 50 level, which is it means that it's expanding, it's increasing. In all other countries, all of them, they were better than expected. Even in the ISM non-manufacturing purchasing manager index was above 60 at 61.9, which is amazing and it shows that the economy is improving very good and it's in a really healthy situation. Service sector, actually, the thing is that service sector, despite the manufacturing and industrial sector that their development started many months ago, like several months ago, service sector was under pressure still, and with improving the vaccination and with reopenings, especially restaurants, cafes, cinemas, and just like overall entertainment section, I can say the service sector increased, and now we can see the PMI data on the service sector also increasing and telling us the economy is fine. At the same time, we have ongoing concerns about the energy market. Oil price touched 7 years high, about 80, and totally the energy price increasing, and we have the shortage in this section in many countries. Even last night we had API data which which shows that in the last week, for the weekend last Friday, which is October 1st, it shows that almost 1 million barrels we had. The API, just like the private sector, added almost 1 million barrels to the inventories. However, today's EIA Energy Administration data will be more important to watch and see that the officials data also is showing this increasing in US inventories or not. However, but it's not all that we generally know that the currently market has a shortage in energy. We have the shortage of concerns in energy sector. So this energy sectors, this shortage increased the prices to new 7 years high, and it means that we will have the more inflation next month, as Mr. Powell also in his last speech talked about that and confirmed that the inflation will be there for a little bit longer than earlier expectations. So this data together is telling us that we have to go to the that telling us that hawkish policies should start a little bit faster than earlier, because inflation is increasing and the economic data is fine. Same thing happened earlier today in New Zealand. As we know, NBNZ, the New Zealand Central Bank, and Reserve Bank of New Zealand, had a meeting earlier, a few hours ago, and they increased their interest rates by 25 basic points, from 0.25% to 0.50%. So now the interest rates in New Zealand is increased. Yesterday, the Australian Central Bank didn't do that, and they told that we need to start interest rates not before that 2024, because economic situation will meet the conditions just after 2024, as Mr. Lowe, the governor of Australian Central Bank, told. But it's not what the market expecting, and generally we are expecting is that we can see the rate hikes in Australia also in 2023, at least in 2023, even if we don't make it at 2000, don't see the we don't see that at 2022, because economic data will tell us in the future, and it's not like that's yesterday. Just because that yesterday they told it will be on 2024, it will be on 2024. It can be changed, as many others ideas change, same as Miss Loretta in the States. She changed her idea, but from the dovish policies, Loretta Mester, from dovish policies to hawkish policies. So this is what happened yesterday. So generally, the economic data is fine, and inflation is increasing, and we have to worry about the situation, and worry about that the central banks will go towards hawkish policies a little bit faster than earlier. Today we will have in European time, we will have again PMI data, but today from the construction and manufacturing in industrial areas, industrial sections, from in Germany, Eurozone totally, UK in European areas. And then also we should not forget about the retail sales data in Europe, in Eurozone. Retail sales data will tell us that what is going on in the market, because will the people also are ready to spend more money or not. So we have to follow that, while we are preparing to see, preparing to go towards for American, for US employment data. And today it will start with ADP non-manufacturing, ADP non-farm employment changes in the US. And also, as I told earlier, EIA weekly report for crude oil inventories in the US also will be important. Today, these are the data that we have to focus on them. As I told, this yesterday's, the yesterday market increased. Let's see that S&P 500. This is S&P 500. As you can see here, yesterday almost the main index covered all the lows of the day before on Monday. However, the market is, as I told, there's ongoing concerns about the inflation and economic data, which will add the hawkish fans, which will add the support of the hawkish fans, that we will start tapering a little bit faster, and interest rates hikes a little bit earlier also. So it's again put the stocks market under pressure. So we can see the weakness today in the market, and this is what we are expecting for today, as Nikkei 2025 in Japan also was weaker. So that's again will add the fuel to the to the US dollar index, and it will help the US dollar index to increase. So we will see the US dollar index today we will see that increasing. Market on the other hand, today, while the market volatility is decreasing again, some other subjects will coming to the market. Like still, this ongoing, the problem is right now there is a two main problem that we have: ongoing conversation, ongoing debates about the U.S. Debt selling, that will they increase or not before October 18. On one hand, in other hand, in China, as you know, we have several other constructions and real estate companies that they were not able to pay their debts, and their bonds yields. So this right now, this is also these two factors also. So the problem, the debt problem in China, and debt selling in the US. This is a little bit problems. These two factors, they were adding the market risk at the moment, and they caused the VIX to stay still higher at its higher levels. You see that when the VIX raised from 18, under 18, from almost 17, raised above 20, still is staying above 20, and it means that the economic risks still, they have high economic risk levels, still high in the market. On the oil front, I can say that the oil front, we don't have still the reasons to see that oil to decrease more. This is that what we can see in the last days, up and down to the 20 and or 50 HMA, and then again increasing. So the energy market still has the reasons to increase. However, today's weakness in the stock market can put the oil under pressure a little bit, and it can be down almost to $77 right now, 78.60. We can see the oil with $77 down today, and but under the 77, it's a little bit under questions. In overall, because overall trend is uptrend. In the cryptocurrency market, while crypto markets increasing in the last 2-3 days, yesterday US SEC also Mr. Gensler, if I don't mistake, Gary Gensler, yeah, Gary Gensler, sorry, Mr. Gary Gensler, yeah, from the SEC, he told that we are not going to the same way as the China did. We are not planning to ban any cryptocurrencies and to ban this. However, this is not what the SEC decide. This is what the Congress should decide about that. What we are looking for is the main regulations, paying their. We want them to pay their tax, and they report the RSI. So this is the main concerns of the SEC at the moment. While we know that he also mentioned about the stable coins. He told that we have almost $125 billion stable coin, which is crazy, which is can be the next problem of the next problem in the financial market, next crisis of the financial market. This much of the stable coins, if they have any background, if they have any if they have any, do they have any guarantee or backup or not? This is the main concern, and this systematic risk should be under control, and it should be regulated. So this is what happened generally in the market. This is what's going on in the market. Hope it was useful for you. So today we have to focus on EIA report in energy market. Today we have to focus on composites and construction manufacturing numbers in Europe, and then in the US and retail sales numbers in Europe, and then in the US season we have to focus on US ADP non-farm payroll employment data, US employment data starting from today, and we have to, the focuses will shift on the US data. As I told yesterday, we have inflation raising, we have PMI manager, purchasing manager index raising, and these two together, they're telling us that we have to go to the hawkish policies a little bit faster. And now we are preparing for the US employment data. If the US employment data also become better than expected, if we see the increase improvement in the labor market as well, make sure that we will see the tapering start from November, not even from the December. It's the situation, it's the market situation, and then rate raise, interest rate hikes from 2022, even in the second quarter, not in the second half of 2022. This is what I expect from these ongoing data and information. Hope it was useful for you, and see you guys tomorrow. Don't forget to comment, like, and tell me about your idea and what you want me to cover more in next videos. Have a good day. Bye.